just gonna scroll through Twitter, see what's new. What? What? Excuse me? Uh, Jay Powell and the Federal Reserve fell again. No guts, no sense, no vision. A terrible communicator. What is this? What are you talking about, Donald? What do you mean? Oh, I get it. I see, Jay. Ah, my guy. Well, look what happened. Interest rates cut. You got that right. Rates were cut by 0.25%. So, what happened here because of this? So, needless to say, once Jerome Powell announced these rate cuts, the market freaked out. And my message today is, let's calm down. Market freaked out, not to a severe extent. They've freaked out a lot more lately. A lot less volatile than I've seen. So, probably drove the market down around 0.5% to 0.75%. And we recovered already within the same day, which is pretty exciting. And I think people realized they're overreacting a little bit. So why would rate cuts cause a sell-off? There's a couple reasons for why investors kind of are afraid of that. For the most part, people believe that this is a time we cut interest rates is usually time for a recession. Right? So you cut interest rates as an attempt to keep fueling economic growth. You get people spending more money, keeps that GDP increasing, and that's the goal, is to keep the economy rolling. It's got a full head of steam. That's what they want to do, is keep it rolling. And that can lead to, obviously, recessions. But in this aspect, this was the second one in a row that they've done as far as decreasing. They could have decreased it further, but from what I understand, I believe they're going to be trying to keep interest rates as is right now. They're going to keep it at this level that they just cut it to, for a couple of reasons. So these are just a couple of comments made by him in his press conference. It was seen as an insurance against coming risk. Pressures remain muted as far as inflation is concerned. So Mr. Powell sees value in sustaining the expansion of the economy that's going on right now. The longer that, and this is agreed on, the longer the economy's increasing, we're growing GDP, wages growing, jobs growing, the more that happens, the more people benefit from it, and it's very true. You know what? That's for sure. Morale is very high. We're unified. We're doing the best job we can in serving the American people. That's Donald saying that one, and you know what? That's pretty cool. That's a Powell thing, actually. Sorry, I didn't mean Powell, but I didn't mean to treat you with the Trump treatment. But sometimes you got to. Negative rates are not on the cards. Obviously good. We don't want negative interest rates. That's just not how it works. It's a challenging time, not a preset course. Try to be transparent. And obviously here's our good old tweet. No guts. It's possible the Fed will have to resume balance sheet growth. We may resume organic balance sheet growth earlier than thought. All right, we're aware of tax payments and bond sales. They're stronger than the response than expected. We do not have implications for the broader economy. So, overall, from my opinion on this, I'm just going to say calm down. People are always so quick to assume negativity, and I hate that. There's a couple of reasons why I'm not scared right now, and I don't think anyone else should be scared right now. If a recession happens, for one, it just happens. There's nothing you can do to predict it. There's nothing you can do to stop it. If it happens, if you believe in the companies you're holding, it doesn't matter. You don't need to sell out of them. You just hold through. if you're getting dividends in the meantime, that's fantastic because you're still earning money on that. So if your company's paying out dividends that you're investing in, I mean, you're still making money in the meantime. However, you may not be getting equity value in terms of share price. You're still gaining money due to those dividends. So overall, as long as the company is going to be good in the long run, it doesn't matter what they're doing in the short term. It really doesn't if a recession hits us. So another point on why I am pretty excited about where we're at right now, just as an economy. Obviously, record low unemployment in all aspects. It's just fantastic. My gosh, unemployment is lovely. And obviously, when we hit recessions, you tend to see we reach a very low point, and then we start to rise up. And people are being negative, as they always are. They think there's no way we can sustain it. So it's almost as if they want a recession. They just keep asking for it. Instead, they just don't believe what we have in front of us and the good things that we have. Same with GDP growth. So GDP is still growing pretty steadily. Only very slightly, could I say, we see a decrease, but overall, very good growth in GDP. I'm super excited. We'll zoom in a little more just so we get a better scope, so you can actually get an idea. Obviously, during recessions, GDP tends to be stagnant, but as you see right here, it's a pretty steady growth since then. And there's not much of an indicator before a recession starts. Usually a little bit of slowed growth, but overall, I'm excited. GDP is growing. Unemployment is decreasing. Always a good sign. I think people just need to calm down. We're thinking too much into this thing, and just let the Fed do what they want. In the meantime, we're just going to go ahead and keep the economy rolling. If we keep excited about it, things are going to go well. So just don't freak out, everyone, and I hope you have a good day.